In January 2021, GameStop's stock price exploded. It rocketed from under $20 to over $480 in just days. This wasn't just a wild ride for investors, it was a shockwave that left Wall Street reeling. At the center, a battle between retail traders, everyday people buying stocks from home, coordinating on Reddit, and massive hedge funds, huge investment firms managing billions, caught in a squeeze. The fallout didn't just shake the market, it rewrote the rules of the game. But how did this happen, and what can you learn from it? Why do Wall Street's giants sometimes stumble, while a group of retail traders can turn the market on its head? Picture this. It's a typical weekday morning, and Wall Street analysts are sipping coffee, reviewing charts, and calculating potential moves with confidence. They're the pros, the ones with the algorithms, the research teams, and the massive bankrolls, the pool of money they can risk without financial ruin. But then, the unexpected happens. Retail traders like you or your neighbor decide it's time to flip the script. Sitting at home, perhaps on their lunch break or after dinner, they're scrolling through Reddit forums like r/Wall Street Bets, where the GameStop buzz is building. They discuss strategy, share memes, and most importantly, they unite. Individually, their trades might be small, but together, they form an impressive collective force, capable of moving mountains, or in this case, a stock. Wall Street operates on models, predictions, and a certain level of predictability, but retail traders can inject a level of unpredictability they don't account for. It's as if Wall Street is playing a grand chess game, aware of every calculated move, while retail traders decide to throw all the pieces in the air. The GameStop short squeeze was a perfect storm, where retail's agility and unexpected coordination caught the heavyweights off guard. This event wasn't just about money, it was about power dynamics. Retail traders, traditionally seen as the underdog, proved they could impact the market significantly. It was like David challenging Goliath, but instead of a sling, David had a smartphone and social media. The lesson? In markets, as in life, the unexpected can happen at any moment. Retail traders showed that even without billions, strategic coordination and timing can disrupt the status quo. But there's more to this story. Let's dive into how you can harness this kind of power and avoid the pitfalls both sides faced. The chaos of the GameStop short squeeze offers an invaluable lesson in trading preparedness and decision-making. Imagine for a moment you're strapping into a roller coaster at an amusement park. As you ascend, you know the ride will be filled with unexpected twists and turns. But rather than just hoping for the best, you engage in a mental exercise called a pre-mortem. You anticipate the possible ways things could go wrong and plan your responses ahead of time. Now, apply this to trading. A pre-mortem is the practice of envisioning potential failures before they occur, allowing you to strategize and mitigate risks. In the context of the GameStop frenzy, a pre-mortem could have meant assessing the risks of a volatile stock and planning how you'd respond to various price movements. Picture GameStop's chart with its wild spikes and dips. You'd determine ahead of time what your exit strategy is if the stock price drops dramatically. Would you hold your position or cut your losses? Knowing your stop-loss point, an automatic trigger to sell at a preset price before you even enter the trade is essential for protecting your capital. This approach isn't about predicting the future with absolute certainty. Instead, it's about preparing for various scenarios so that when emotions run high, your decisions remain grounded. In the GameStop saga, many traders found themselves caught in the excitement, making impulsive decisions that led to significant losses. But those who had a pre-mortem plan were better equipped to navigate the turbulence. So how do you implement a pre-mortem in your trading strategy? Start by asking yourself 3 critical questions before entering any trade. What potential outcomes do I foresee? Where will I set my stop loss? And how will I react if the market doesn't go my way? By rehearsing these scenarios, you'll be ready when the next roller coaster market ride begins. And as we dive deeper, let's explore how Wall Street, with all its expertise, missed the signals retail traders seized upon. If you're still with me, here's the part that breaks most traders. Regular people, armed with little more than a Reddit thread and a dream, shook the foundations of Wall Street. This wasn't just a wild ride on GameStop's stock chart. It was a shift in who could move markets. Look at this. A lone retail trader, an everyday person trading from home, on one side. Wall Street's seasoned pros on the other. The retail trader jumps in with a small account, driven by curiosity and a spark of rebellion. Wall Street firms, flush with money and data, make calculated moves based on tested models. Then the GameStop short squeeze flipped everything. The collective actions of small traders started overpowering the giants. Retail traders had an unexpected weapon: mass coordination. Through Reddit and other platforms, they organized together. They targeted heavily shorted stocks that big funds had bet would fall. A short squeeze like GameStop's happens when a stock's price surges. Traders who bet against it are forced to buy back shares at higher prices to cover their bet. That buying pushes the price even higher. The effect cascades. Wall Street got caught off guard. The institutions that usually set the pace suddenly looked vulnerable. They missed something critical. What happens when retail investors act as one? The big firms were watching traditional signals and historical data. Meanwhile, retail traders were riding a new kind of market movement, powered by online communities. What's interesting, Wall Street underestimated the collective influence of individuals connected through technology. The mistake wasn't just predicting the wrong outcome, it was missing a shift in how markets actually work. The GameStop saga showed that markets aren't just numbers and charts, they're people, emotions, and sometimes a bit of chaos. So when you look back at this event, the lesson isn't only about the financial outcome. Markets are evolving. The forces driving them are more diverse than ever. The next big move might not come from a boardroom. It might come from 1,000 retail traders typing on their keyboards. Your desk is cluttered with scattered notes. Each one details your GameStop trade plan. It's a busy morning, and the market just opened. You're studying your screen, fingers hovering over the keyboard, waiting for the right moment to act. A $250 stop loss is your safety net. You plan this carefully. You know the risk of holding a volatile stock like GameStop. The chart's wild movements keep your eyes glued to the screen. Each spike and dip pulses with adrenaline. Suddenly the price plunges. The clock hits 9:30 a.m. Your stop loss triggers. A quick $250 loss. Frustration starts to bubble up, but you remember your plan. This is where cutting losses matters, the trading version of folding a bad hand in poker. You remind yourself, better to lose a small amount now than take a bigger hit later. As you step back, you see how important this decision is. The discipline to stick to your stop loss isn't just about this one trade. It's about long-term survival in the market. Each trade is like a hand of poker. Knowing when to fold, when to cut your losses separates the people who last from the people who blow up. The lesson is clear. Emotional trading, making trades driven by fear, excitement, or ego, not a plan, leads you into dangerous territory. The market doesn't care about your hopes or fears, it only responds to actions. By following the plan, your actions line up with your long-term goals. But what if the market rebounds right after you exit? That nagging what if can haunt traders. Here's where a pre-mortem helps, and we'll get into that in the coming segments. By thinking through possible outcomes before they happen, you can act with conviction. How strongly you trust your reasoning, knowing you prepared for this moment. This single GameStop trade might feel small, but it mirrors bigger market dynamics. Cutting losses early and sticking to your rules is your real safeguard against the chaos. As you tidy up your scattered notes, it hits you. Every trade is a lesson. The market is the ultimate teacher. So next time you approach a trade, remember this moment. It's not just about making money. It's about the discipline to follow your plan and the wisdom to walk away when needed. This mindset doesn't only apply to GameStop. It's a universal principle for the unpredictable world of trading. And with that, let's get into how a pre-mortem can strengthen this mindset. Imagine you could look into the future and see how your trades play out. This isn't a fantasy. It's the power of the pre-mortem. A post-mortem looks at what went wrong after the fact. A pre-mortem flips it. You picture the failure before it happens. It's your secret weapon to avoid becoming another GameStop casualty. Here's how it works. Before you take any position, a trade you currently hold, or make an investment, you pause. You mentally fast forward. Picture the worst-case scenario. The trade goes south. You're sitting on losses. What specific mistakes led there? Did you ignore your stop loss? Were you too emotionally invested? By facing these questions up front, you strengthen your plan. You guard against impulsive moves. Think of it as an insurance policy for your trading discipline. Using a pre-mortem is simple. Add it to your process before every trade. Picture the possible pitfalls and adjust your strategy. Quick aside, if you found this useful, subscribe. We cover this kind of psychology twice a week. This approach shields you from avoidable losses. It also sharpens your decision-making edge, a small statistical advantage that pays out over time. The real question? Are you ready to use it before your next move? Before you go, think about this. How many times have you wished you saw the market's next move coming? If you've been nodding along, hit subscribe. Every week we get into the psychology behind trading. We bring you ideas that can change the way you see the charts. Honestly, you won't want to miss the next one. There's always more to learn, and we're here to make it clearer.